Ashraf, taking a look at the big moves today, Arcelor Mittal came out quite a bit of pressure. In fact, the company was down 4% for today. We know there's a lot of issues coming through from Kumba Iron Ore, considering that there's a third party involved here as well. Your view on where these companies are going to be headed? Do you think there's going to be significant pressure for Arcelor Mittal and Kumba Iron Ore going forward?
I think what was interesting is that Imperial Crown Trading came into the whole process once the new rights were being issued. So Kumba wasn't even aware that there was someone coming to bid for those rights. Neither was Arcelor Mittal. The assumption was those rights would just be rolled over and life would go on as usual. This has really been something which has been thrown in the works, and they now have to find an agreement with Imperial Crown as to how they're going to pay out royalties, how they're going to share the spoils, etc. And for Arcelor Mittal, what that means is higher input costs. Yeah. Now, higher input costs on your most basic input means higher operating costs going forward for them, and therefore they'll have to pass those costs on to the consumer. But not all of those costs can be passed on. So margin will certainly take a hit.
And we know that it's going to be diluting shareholder value as well quite significantly. What do you make of Arcelor Mittal management? Do you think they should be held accountable for the lack of inaction?
I think they should be held accountable. What was interesting is that of the original Mittal team that came to South Africa to run the business, the last person left 6 months ago. And it's been purely a South African management team. So they will certainly hold that team accountable, because they'll say, you've missed a beat. You said that you were watching South Africa carefully, you were politically well connected, but you couldn't deliver at the end of the day. So that will happen internally. But my guess is they will bring a team over from Europe to rectify the situation.
Ashraf, thank you very much for your time today. That was Ashraf Mohammed from Regiments Capital. With me on the line now is Glenn Osmond. He's the CEO of One Time. Glenn, thank you very much for your time. We had some interesting numbers out today from your company. Of course, we've got to take into consideration that they're coming off a relatively low base, but passengers up 12%, revenue a gain of 19%, operating costs up 11%. Give us your view on the numbers and what's going to push you forward or higher from these levels.
Yes, it was a successful 2009. We saw improved margins with a low fuel price. We saw strong revenue growth. What's really exciting is that we grew in a shrinking market, so we're pretty happy about that. We achieved headline earnings around about just in excess of 80 million, so we're happy with that as well. Looking forward, we're expecting strong revenue growth for this year as well in terms of the airline and the maintenance business as well. We've seen improved margins. The airline's achieving margins of around about 10%, which is really high by world standards as well. So we're fairly happy with the performance for 2009.
Okay, financing costs are up 57%. That's quite significant. Give us some insights into that.
It's really only because we finance all our aircraft, we finance it on the balance sheet. Most airlines have these long-term operating leases where that number appears off balance sheet. We bring all the aircraft on balance sheet. We like to own our assets, and they'll all be paid off in probably about 2 to 3 years' time. So that brings on a high finance cost on your income statement, but a low aircraft leasing charge.
Glenn, I'm sure you're quite glad that you don't operate in Europe or the UK at this stage, all the troubles that have been occurring in that region. We know that the airline industry under the spotlight and has come under significant pressure. What do you think the right recipe is for a successful airline? And when looking at it in South Africa, given that competition is quite rife, especially at the lower end?
I've always thought the formula for an airline is the same as the formula in any business. It's all about service and price. So if you operate at low operating costs, you can offer low prices. That brings the guys on board. And if your service is really good, you bring them back again. So we try to simplify our philosophy in the way we run our business. It's all about service and price. As long as you can offer low prices and excellent service, we just seem to grow way in excess of the market growth.
Glenn, on a lighter note, we know Soccer World Cup is going to be underway later on this year, so everyone is keeping their eyes out in terms of the pricing here in South Africa. And I was reading an article at the Sun, the UK Sun, of course, and they say that England fans are paying through their nose to watch their heroes at the World Cup. And they say that inland flights between England's group venues of Rustenburg, Durban and Cape Town look like costing an extra £827. So that's quite significant. But what is One Time offering during this period? I mean, how are you managing your costs and your pricing? Because clearly you want to attract the tourists, but at the same time you need to capitalize on the fact that we've got such a great event happening in South Africa.
Look, if the article was in the Sun, I wouldn't believe it anyway. You know? At those sort of numbers, you're talking about flying around about 10,000 rand. If the conversion's right. In South Africa, what's going to happen for the World Cup? The airfares are going to be very similar to what you'd pay over Easter or Christmas or those sort of periods. There's going to be really cheap fares. Over the World Cup period, we'll be selling some tickets at 300 rand on the off-peak days. And the higher airfares will be exactly what you pay in Easter and Christmas. It's not going to be any higher than that.
So international media making noise once again for nothing.